I'm Rick Kahler, and thanks for joining me. Well, nobody needs to tell you that gas prices are soaring out of sight. What you may not know is exactly why prices are at such high levels. As with most problems, there are no easy answers or quick solutions. And as a society, we don't want to hear that. We want easy answers and quick solutions. Pandering politicians and the sensationalists in the media are quick to give us what we want. Someone to blame and a quick fix for the oil problem. So the blame? It's easy. Greedy speculators. The fix? It's easier still. More regulation. Recent headlines read, Obama vows crackdown on oil speculators, and McCain calls for federal probe of oil speculation. Even Fox's Bill O'Reilly has called for the regulation of the evil oil speculators who are hurting the folks. In recent months, I've wondered exactly who are these greedy and evil oil speculators who are single-handedly driving up oil prices. Recently, it dawned on me exactly who Obama, McCain, and O'Reilly are referring to. These evil speculators are my clients. Yes, it's Dwayne, a retired banker who will turn 100 this year. It's also Mary, widowed 5 years ago when her husband died suddenly of a heart attack. And don't forget Brandon, a senior at MIT. They and 65 more of my clients are the speculators these pundits are blaming for crippling our energy prices. Now, how did these ordinary Americans turn to the dark side? Well, they simply added a commodities index mutual fund to their investment portfolios. I began advising my clients to do this in 1998. Long before commodity index funds became popular. These funds, just like stock and bond index funds, are a simple and low-risk way for an investor to gain a diversified exposure to an asset class. The most popular index fund for stocks is the S&P 500. For bonds, it's probably the Lehman U.S. Aggregate Bond Index, and for commodities, it's the Goldman Sachs Commodity Index. The argument used to blame these investors for high oil prices is this. Commodity prices have soared over the same time that investment in commodity index funds has swelled to $260 billion. Therefore, the increase in commodity prices has been caused by the billions of dollars flowing into the commodity indexes. Well, it seems odd to me that such blame was never thrust upon the S&P index in 1999 when stock prices were soaring out of sight. Neither were fingers pointed at those who invested in the Wilshire Real Estate Investment Trust Index. They didn't say that that was the cause of the real estate bubble. Even more interesting is that not all of the commodities in the Goldman Sachs Commodity Index have increased. Why have precious metals, oil, and the agricultural sectors of the index risen while livestock and industrial metals have been flat or trending lower over the past year? It seems to me, rather than focus the blame on Dwayne, Mary, and Brandon, maybe we could blame rising inflation. Or how about the Fed keeping us at artificially low interest rates? Maybe we could look at a weak national currency policy or peak oil. Perhaps examine world supply and demand. Or maybe a failed national energy policy. Any of these could be possible influences on our out-of-control energy prices. Just as most investors came late to the party in 1999 when the stock market peaked, and in 2006 when real estate prices spiked, I have a hunch the same is going to happen with commodities. In the last year or so, as commodity prices spiral upwards, investors who chase return, I call these folks timers, began putting more and more money into commodity indexes. Chances are they've come late to the party just as it's winding down. I think predictably these are the speculators who are nothing more than people trying to time the market, will lose their shirts, just as they did in stocks in 2000 and on real estate in 2006. The only thing different about this bubble is that this time it's commodities. Thanks for listening.